Narrow ranging, choppy day today, minus 2,000 in the 200K portfolio trading 4 micros, minus 500 on the 50K portfolio trading 1 micro. 3 losing days in a row. We had gains last week to buffer the losses this week, minus 7,500 on the week in the 200K and minus 1,875 in the 50K. Down on the month about 850 on the 50K portfolio and down about $3,400 on the month on the 200K portfolio. And let's look at the portfolio calculator. So let's pull that into the window. Yesterday I said there's a drawdown alert, and we have another drawdown alert today. Minus 24 will show about minus 5K per E-mini. This is on a per E-mini basis. We have minus 24,000 with a max drawdown of 30,000, and so a good time to get in. As of yesterday, it was minus 30 on the month. We are off because of that 60-minute breakout scenario. I want to show you that in a minute and why you need to turn that back on if you're trading 60-minute breakout in Q with a monthly stop loss. And so here is where we are. Here's the drawdown curve. We've underperformed on the month in real trading. This will show up today as should show up around minus 5,030, and 40% of that would be minus 2,000. So we're about $1,400 underperformance because of 60-minute breakout. And 60-minute breakout was this strategy right here last week on CPI. Where is that trade? Right here. So let me compress this a little bit. Last week on CPI, the micros traded 55 points lower, had a stop loss here, while the minis were not stopped out. This was a profitable trade on the minis, a loss on the micro. The next trade was a loss. This hit the monthly stop loss on this strategy for the micros, but not the minis. And so we're trying to sync up with the minis. We missed. This was kind of these two trades were break even. This is a winning day. This is a winning day. We missed those. This is kind of a break-even day, and then we had a losing day here. And so since we have a drawdown alert, I recommend sinking back in. And the best way you can do that is to come in here and right-click, customize strategy, and for this month, remember to turn this back on next month. Take monthly loss limit, set it to false. Go ahead and set it to false so the signals will come back on, and we match the E-minis for this. And so you see we had one loss today, holding long overnight in this one, as well as 60-minute breakout short on the ES that reversed. So EVP1, we were at break even up here, almost back to break even on the day, but it's a narrow ranging day. Then the market just rolled over. So the market's been rallying into the close, and now it rolled over now that we're long. And so disappointing trade. Tick pulse, decent short setup. Market 3 days in a row, we've had this market environment where sold off pretty hard, rallied all the way back, and then next day sold off, rallied all the way back, and then today starting to sell off, rallies all the way back. So 3 days in a row where it's just chasing higher after initial selling. And so tick pulse was short here, stopped out. Tick reversal, I thought these were good short trades. The market's, it's not selling at the lows, it's selling as it rolls over instead of hitting the lows. Same thing, tick reversal, kind of a topping pattern right here, but the market gains legs and rallies anyway. Overlap in Q, long on the day, and then this sell-off at the end of the day. It's just we're getting this open to close and choppy price action, and then it closes near the open. And so not getting any extension on the day trade. Parabolic VSD in Q took a long trade down on the day. And so 1, 2, 3, 4, 5 strategies were losers on the NASDAQ. 6 was a winner. One was a winner, 5 was a loser, and then this one was down as well. So another loser here, but holding a position overnight. So 1 out of 7, low winning percentage. We're back in that low winning percentage on the dailies as well. I'm going to show you the portfolio calculator in a minute. Here's the ES. ES did a little better today. Nice trade on Cobra CT3, picking that bottom. Really good picking that bottom trade. Tick Fader took a long trade today as well. Rallied here, and then we had 60-minute breakout. Short and then reversed along, stopped out. Short, reversed along, holding long overnight. This market is in chop mode right now. You see this big rally here. It's a nice smooth breakout, and then just chop fest in here the last 2 days. And let's look at the portfolio calculator. This is, so let's look at the dailies. I want to take a look at that. Percentage winners, 33% as of yesterday. Let's see what it is if we put in a losing day today, minus 5,000 per E-mini. And let's see what the percentages are for the last 12 days. It'll be 33, 9 out of 12 of the last, 9 of 12 of the last day, trading days have been losers, and so it's 33%. And then you see that on the chart here. We were up here when it was hot, went through this hot streak, 75%, and then now it's gotten to the cold streak. So good time to get in, good time to add contracts right here. And we started on a drawdown in this area on the 7th. Wait, it was the 9th. So we started on the 9th around this drawdown area. So we're back to this drawdown area, same level as before. 24,000 is the drawdown that we were at before, but we are down a little bit because we got out of sync with the 60-minute breakout. So that is where we are on this. You can see the minus 7,000 on, let's see, plus 9,000 on Monday. That was put us at equity peaks. And then we had Tuesday minus 7,000 per E-mini. Wednesday minus 12,000 per E-mini. Thursday we're at minus 5,000 per E-mini. So challenging trading environment, and looking forward to Friday's trade for some clarity. Haven't had a nice trend in a while, especially to the downside. So we'll see if we get an uptrend or a downtrend or more chop tomorrow. One more thing as we look at this is the Fed's balance sheet was just released, down 30 billion this week, down 116 billion from its April 13th high. So in 4 months it's gone down 116 billion. So $116 billion, and at the high it was 8.965 billion, or trillion, 8.965 billion, 8,965 billion, 116, so it's down 1.3% from its all-time highs of 8.9 billion. So 8.9 billion, down 116 billion in about 4 months. Initially, they had said they were going to drop it about 95 billion per month, and they changed that. In 4 months, it's only gone down 116 billion. So pace is picking up a little bit. So that's probably will affect the market as that continues to accelerate downward. If that pace continues, and if they do what they say they're going to do. And so it's supposed to, they decreased what they were going to do, but it's supposed to pick up again in the month of September. So we shall see how that affects the market. We've often said that, balance sheet up, stock market up, balance sheet down, stock market down. And the reason that we say that is based on this history of the Fed's balance sheet. You see what happened here, financial crisis in 2009. Balance sheet went up, and then they had more QE, and then more QE, and then the pandemic hit, and the balance sheet doubled. So pretty crazy. And so that's the balance sheet. That's the history of that. And before the 2008 financial crisis, the balance sheet was less than $1 billion, or less than $1 trillion. It was around $925 billion. As of September 2008, it multiplied by 10, and so it kind of mirrors the stock market move. And so that is what we're looking at, and what I wanted to share with you today as well with the daily trading system signals.
Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.